Clayton, what we'll do is we'll start with a little bit of background, if you wouldn't mind, because a lot of I know a lot of these people, of course, Barrow, Brian, and hey, Baron, a lot of these people know who Clayton Collins is, and if you don't, you need to. So why don't you kind of give us a little bit of your background, and we're super excited to have you today because if anyone knows what's going on in the market, it's Mr. Clayton.
Well, I appreciate it, Don. Yeah, so I'm the CEO of HW Media, where I have the pleasure of operating Housing Wire and Altus Research and Real Trends. Our mission and vision at HW is to bring the full picture of information and community to professionals across the housing industry, from mortgage and real estate and title and appraisal, a little bit of home building as inventory becomes a bigger issue. But we focus on housing day in, day out. Everybody here at HW is a self-proclaimed housing geek. We love it. We feel like we are in the industry, not just opining on what's happening in the industry. Which gives us a little bit of a different vantage point. We love this sector, and as wild and crazy as it can be, with as many changes that the market and industry and regulation throw at us, we get excited about trying to bring information to you professionals in the mortgage and real estate industry.
I love it. Speaking of housing geeks, Gino joined us,
I did, but
which
I'm having all kinds of tech issues, but I didn't want to not join you guys. So my computer is down, so I'm on my phone. That's the best I can do right now.
oh,
You
your
made it
computer's
work. You made
still.
it work.
Yeah, yeah.
Yeah, good to see you guys.
Well, this just proves it is live.
We learned that on the radio show. Don and I did it for 10 years. We were live on AM radio. All kinds of things happened you didn't plan on.
Right. So this is live. So that's why we really press that as much as possible. We'd love to have you guys ask questions. Use the reaction buttons. You know, those are always fun. It kind of lets us know you're listening to us, lets us know what you like, what you think might be funny, all that good stuff. Because sometimes we do tell something funny. Usually it's me teasing Gino, but that's just what we've done for the last 20 years together. So
Par for the
super
course.
excited. Yes, super excited. So what's if anybody has questions, just make sure you post it in the chat. And then we're going to talk a little bit today because we want to bring up one, we want to let everybody know about the event that we're going to be sharing with Clayton in Colorado Springs in 9 days. That's going to be phenomenal. It's all the industry leaders getting together and networking and learning from each other, learning what's happening in the industry. So that's why we brought Clayton on. Is Clayton's we love talking to Clayton because of Housing Wire, he does have his finger on the pulse. Because you see a lot of media that is crap. I'm sorry, it doesn't have the finger on the pulse. It isn't factual. It's just trying to buy your eyes and your attention. Where I love Housing Wire because Clayton, you guys do a great job of here's what's happening. Here's the facts behind it. Here's the reports. Here's the stats. Because it's really nice to have those things to know what's real and what's not. Perfect example, we even watch, Barry and MBS Highway, and you see certain things that are like, oh, the Fed thought this with the report, but the report's BS because it's going to get adjusted in the next month, that type of thing. So we wanted to talk with you about where you think the housing market is, because you're real estate and mortgage, of course, and what you see in the future and what we can do to take a challenging market for the last 3 years. We've had a very challenging market, one of the most challenging I've been in 40 years, and turn it into an opportunity. Because I think there's an opportunity in this market without a doubt, especially when it comes out the other side. You can absolutely crush it and literally change your future. So I want to get your opinion on that.
Yeah, well, that's a big charge, and I appreciate the compliment on Housing Wire. Long before I got to be the housing geek and really embed myself in this industry, and I've been leading Housing Wire for nearly 10 years now. I knew my first and my biggest charge was to hire, develop, and retain the best media, journalism, sales talent out there. And spent a lot of time recruiting great people in our newsroom, in our research and data team, in our marketing and events org. And so when you compliment Housing Wire, it's really a compliment to them. We got great people like Sarah Wheeler and James Kleiman, who are publishing every day, and Flavia, Logan Mohtashami, who's larger than life out there speaking on stages and podcasts, and CNBC and Yahoo Finance. There's literally not a day goes by where he's not like, hey, I'm on NPR today. Hey, I'm on Yahoo today. Hey, I'm on CNBC today. And he's out there representing Housing Wire, representing us as housing professionals, and talking about what's happening in the market. And there's really, when I look at our newsroom and our analysts like Logan, the degree to which they are tapped into the data and obsessed with every number, whether we're talking about the economic indicators, like you mentioned, reports coming out of the Fed, what's happening with interest rates, what's happening with inventory, what's happening with home prices, demand, demographics. Like our team is so clued into all those things. And while it might get dry and might get geeky to focus on every single one of those numbers, we are in a market with a lot of really important drivers that have made this a complex housing market. And I think it's really easy to say for like the passerby, the person who's not in this, like Don, Gino, me, like we're in this housing industry for good. It's really easy to say the housing market looks broken right now. Like we're operating in an environment where affordability is a never-ending challenge. Rates aren't cooperating. Inventory's been tight. It's very easy to say, just throw your hands in the air and say this is broken. But that's not us. Like we're in this. Like we have to keep operating our businesses. We have to keep serving clients, home buyers, home sellers, partners in the industry. So throwing up your hands and saying the market is broken is kind of a worthless exercise. So that's where data comes in. That's where you have to really understand the dynamics, understand what you can expect in future months, quarters, and years, what your clients can expect in future months, quarters, and years, and how to use the current market dynamics to your advantage, and really understand what home buying and selling opportunities look like today, what financing opportunities look like today, and how you can use financial education and economic understanding to your advantage as a dedicated cycle in, cycle out housing professional. And we all know there's a lot of passerbys who won't be here, to see the next refi boom, or who weren't here to see the last one. And, but like there is a group, and, I think that group is represented in the momentum builder community of mortgage professionals and real estate professionals that are in this, and just throwing your hands up in the air and saying, hey, it's broken. It's a bad time to buy. It's a bad time to sell. Just not an option. Like that's not what I'm here for. I don't think that's what you're here for. So like now we can go in and talk about what's actually happening. So that's the launch point, Don.
Yeah, actually,
Actually,
if I could take this,
great job
Dom.
with that.
Yeah, if I could take this, look, one of the things I've been really thinking about lately is, and I had this conversation with a consumer last night. Don and I don't do loans anymore, but we have a past client that's currently buying a house that's probably done 7 loans with us. So he called me last night. He's already been pre-approved. He's shopping for a home. And he says to me, he says, man, do you think I'll be able to refinance in the next 6 months for like five? I'm like, no, absolutely not. I go, and why would you ask me that question? He's like, well, he says, that's what I know is historically my rates should be. And I said, well, that's the problem. I said, how long have you been buying real estate? And he says, well, 10 years or so. I said, perfect. You've lived in a completely manipulated market. Everything you've ever seen is a manipulated market, because in order to go back to a real market, a natural market without government stimulus, you have to go back probably to say like maybe like 2006. And even then, you still had all the forces from the artificial lending. So to have a real natural market where buyers and sellers have to negotiate and affordability is a real issue and there's no government stimulus to be had, you probably have to go pre 2000. So I don't think anybody that's in this market has seen what a real market looks like. So I don't think this market's broken. I just think it's an old market. And I think if you remember, when I was a real estate agent, I said, why are these listing contracts 6 months long? And they said, well, that's how long it usually takes to sell a house. And if you look at globally, it usually takes about somewhere between 12 months to 18 months to sell a house in Latin America and other countries. So I think we just got spoiled by artificial stimulus that was created to fix the housing market that was broken in '07, '08, and quantitative easing that was driving down interest rates, and the pandemic that drove down interest rates, and all these artificial factors that created an unrealistic expectation of what real estate and mortgage should be like. And now it's our job to re-educate, take them back to the past and say, no, no, this is normal. This is actually what it's supposed to be like, and it's healthy. It's just going to take time for everybody to get used to it and understand that this is what a normal market looks like. And I think that's where we're at today. I don't think it's broken. I just think no one's seen this for a long time.
I think that's really well said. And we've written a lot about, and Logan's talked a lot about, like what year-over-year metrics and quarter-over-quarter metrics are going to look like as we come off of these like cyclical lows. As we look back to really low interest rates, it's easy to like look at rates right now and say they're 2x what they were a few years ago. It's also easy to look at numbers like inventory and say like inventory is half of what it was in 2018. Fortunately, that's correcting itself a little bit. We're at 787,000 active listings in the US right now, which is about 35% higher than we were a year ago. So there is some health coming back. And while some factors like rates, Gino, as you like described the history, yeah, we might be in a higher for longer environment, but there are some elements of the industry that, finally start to cooperate. Like we're finally starting to see inventory build up. And if you've been
Mhm.
following Housing Wire, you've heard us pounding the table for more inventory for 4 years now. And it felt insane in 2020 and 2021 when Logan in our newsroom were screaming from the rooftops saying like, this is a savagely unhealthy housing market when we were doing more transactions than ever, rates were lower than ever, affordability was great. Everybody in the industry was fat and happy. But like the data was telling us like this is going to lead to a place that we don't like. It's going to lead to extremely low inventory. It's going to lead to very fast home price appreciation, and eventually rates aren't going to be 3% anymore. And that's what we really saw in 23 and 2024. But it does feel good if you want to look for things that are positive and talk about. We are seeing inventory rebound. And it's important to remember we want that. Like we're at 787,000 active listings in the US. Like we track inventory at the top of Housing Wire's homepage every single day. You go to the homepage right now and see active national inventory. And
787,049.
yep, exactly. Yeah. And but we're back to 2019 levels now. But if you go back a few more years, like, hey, we're used to a market that has over 1 million active listings. So historically, we're still low on the inventory side. But and I know this is a country made up of thousands of local markets, not one national market. But for the purposes of this call, if we have to talk about it as a national market, we are better than we were a year ago. We're not back to the historic norms on inventory yet. Home buyers and sellers and agents still feel like inventory is sitting a long time and starting to build up and creating some scary dynamics. So like I think if you're going to let data be the antidote to fear, that's a number, that's something you got to talk about. Just because inventory is up 35% year over year, it's not a scary thing. That's something we were all rooting for. We
Right.
needed inventory to grow to create more optionality for home buyers, first time
Mhm.
and repeat. We also need inventory to grow to help, which it's doing, to help stop rapid home price appreciation. And we
Yeah.
know that we cannot, as an industry, operate in a market that has 7+% mortgage rates and extremely low inventory and rapid home price appreciation. We're already in a place where first-time home ownership is harder than ever. It's very hard for first-time buyers to come into the market right now and find a home that they want, that they can afford. And we are seeing some dynamics like inventory start to cooperate and like and
Right.
maybe open the door for for a slightly more affordable market. And if you are an industry professional, and I always like to talk about it this way, housing is a marketplace. So there's no such thing as a bad market. It's just bad for depending on where you are on the side of the trade. And and as
Right.
housing professionals who want to see a liquid market where homes can be bought and sold at a relatively high volume, we want to see home price appreciation like flatten out. And like staying in like the very low single digit growth rate gives consumers confidence to keep transacting. What we actually need is a little bit of a decline to improve affordability. But the second you get a decline, you're going to get national headlines that say, It's over. The housing market is blown up. People are losing equity value in their homes. Um, you know, it's the
Creating
warning that
panic.
it's gonna happen. That's gonna be the headline. If you're not already answering this question for consumers today, you're gonna answer these questions one day, and it's not entirely a bad thing, depending on where you are in the trade.
Yeah, I
Uh,
think it's incumbent upon us to remind people that when they're buying a home, it's not necessarily an investment. I know a lot of people like to think that it is, but there's so many other investment vehicles out there to consider if you're really using your home as an investment. If you want to be an investor, then go ahead and buy investment properties, get into short-term rentals, go to commercial, do whatever you want. But the home that you live in with your family is so much more than that. And I think too many people focus their energy on, is it a good time? Is this a good investment? How are we going to make this happen? Am I going to make money on this? Can I sell it in 2 years? Listen, that's not what it's for. So I tell people like this should be, and even with real estate investment, I say this is housing is a get rich slow game. So I want you to make this decision. Like, is this the right home for you and your family for 5 to 10 years? That's the question we need to be asking because if you're in it for 5 to 10 years, then eliminate the noise. Don't worry about what happens next week. Don't worry about if the market's going to go down 10%. None of that matters. Do you need a good school district? Will this make you feel more safe and secure? Is it a good place to raise your children and send them to school? Like those are all the reasons that we buy
Yep.
houses. So I think we need to focus more on the emotional aspect of it and take people into the longevity of home ownership instead of the what's happening right now, which is what we've been kind of unfortunately just forced into living this right now, right now, right now lifestyle. When I think if we start to look at things with a little more longevity, we can bring some peace to a transaction.
And I 100% get like the talk track that like your house is not an investment. It's not a liquid investment you should be trading in and out of
Yeah.
every 12 to 24 months. But there's some great data out there that we've published at Housing Wire and that I've seen from folks like Dave Savage and Kristen Messerly at First Home IQ, which supports your later talking point, Gino, that housing is a get rich slow scheme. And the net worth that homeowners are able to build over multiple decades is significantly higher than
Oh
renters.
yeah.
And so
46
like,
times greater right now.
Yeah.
what was that metric?
46 times greater than a
46
renter.
times. So
And
like
it varies. Sometimes it's 36, 46, 42. But no matter what,
whatever,
it
let's
builds
call it
wealth
40.
over
But
but over
it's
time.
there's nuance in the talk track. Like housing can be a great investment, but it is not a stock that you trade in and out of. And that's how I look at it. But ultimately, we all need
Yeah.
shelter. We've decided that living
We're
under a
cutting out a
roof is
little bit.
better
Is
than the
that
alternative.
I'm not. You might be, Gino.
okay?
On that note, what's really cool and why I like, that you guys provide so much data, Clayton, and I'm looking at your updates are like by the minute, 4 minutes ago, 55. I mean, you guys are on track with whatever's happening. So those of you on this call,
The team should go faster, faster, faster.
be- all of you should, look into Housing Wire just because you'll be in the know. And then you can talk facts and numbers. For example, we talk about this, housing being an investment or not. But if you have the data to show somebody over time, you're going to crush it with a home. Like people get nervous, like you said, Clayton. There'll be a time when the appreciation level goes from 5 to 7% down to like 2%, and everybody's going to freak out that everybody's going to lose their homes. The market's crashing. It's not the fact. It's just slowing down due to the fact there's more inventory. It's becoming a more normal market. It's actually healthy. All those things you spoke of intelligently, we have to share that with our clients. And what's nice is your data helps us have something to back it up so it isn't us selling them to buy a home or that it's a good investment. Let me show you the facts. You know, for example, whenever recession talk starts, everybody gets really nervous, but then we can show the facts that over the last like 75 years, only 3 times in history has the recession hurt our market. In most cases, it actually helps our market because it lowers interest rates and makes housing more affordable. So it's actually good for the housing market. Those that
Yep.
are, losing jobs, a lot of times, and don't take this wrong, are not the ones buying homes anyways.
Spot on. I mean,
Okay.
like something Logan talks about all the time.
Oh,
Is
I love
like
Logan. He freaking
we
nails
we
this
can
shit.
have like it's terrible. You don't root. We shouldn't root for bad economic data, But like if we have a thriving market with 5 million purchases, um, our economy can, withstand a significantly higher unemployment rate and a very tough dynamic to maintain a liquid market at 5 million in transaction volume. So like it's we don't want to root for that. We want to root
Of
for
course not.
economic success, but at the same time, like you've been in this industry for a cycle or two. You understand, when opportunities are there, and like we can do well in all market cycles, but some are tougher than others.
All right, so I'm going to bounce something off you. We do weekly sales meetings, so as you know, Gino and I are still in the grind. We understand the plight of the originator, of the companies, of the managers that have teams that they're trying to motivate, incentivize, help them get through this challenging time because there's just until this inventory buildup, which you mentioned is a very positive thing and was needed for our industry to even recover from the, I don't know, basically the doldrums of just being stopped by high interest rates, because that's really what happened. The higher inventory over time is going to be healthy for us and create opportunities. But we know that because this slowdown in our industry has been longer than anybody expected. So everybody's been hoping after year one, hopefully refi boom will hit because of high rates. Oh, maybe year two. Now we're on year three, and everybody's like hoping for it. And I mentioned to my team, and they get tired of me mentioning it, but I try to pull any positives of the market from my 40 years of experience, saying, "Hey, I know it's hard now, but those of us that are going to survive are going to kill it because a lot of our competition is leaving." And this individual astutely said, "When?" I'm tired of hearing that because it isn't helping me now. But there is another side of this. You've seen it, Clayton, and you know the numbers are there that when it does turn and we've now lost, I bet you after this last little run up in rates, we lost another 20,000 in our industry that are just like going back to what they call a real job, even though this should be a real job for them. Um, I think we're gonna lose 75% of our competition that was there just 2 years ago. So I think there's some light at the end of the tunnel for those of us that hang in there and survive and don't look for the last thing I'm going to add, because I want your opinion on this, because everybody's looking for the silver bullet. Like maybe I'll use this tech, maybe it's this social media, maybe it's this company, when it's just building your database and your relationships is where Gino and I are pushing right now. That's where you're going to succeed.
No objection to that message. Like,
I know I was on my soapbox, but I wanted to kind of get that out because this is what we're seeing in the market with our team that are very good producers. They're very good. A lot of them are on this thing. And perfect example is Claudia Diaz. She's on this call. I just hit her up last night. I'm like, how are things going? Because she's a grinder. Like she's one that doesn't use excuses, waiting for the market. She's like, here's what I'm doing right now. It's a little slower right now. So I'm doing this, and this. But
Did,
Claudia out there and she outproduces most of our company. She's a top 10 producer because of it. And kudos to you, Claudia. I'm giving you some thumbs up.
yeah, I think that by the way, I got my tech mostly working, so I'm happy about that. One of the things that we talked about, I guess Jeremy Forcier, I missed that recording. I still have to go back and look at it, and says, whatever it takes, that's what it takes right now. It takes whatever it takes. So the question is not, is this market any good or not? The question is, are you willing to do what it takes to win in this market? And if you don't like it, that's okay. You can quit with so many others that already have.
Yep.
Totally understand that. But like Don, you mentioned, there is no silver bullet. This is harder than it's ever been in my career. Harder than we've had these discussions, Don. Harder than in your career in 40 years. So yes, are we faced with adversity? Absolutely. How do you react to it, and how do you help your clients through it? And I think one of the dynamic shifts that need to happen is we need to be empathetic salespeople. We have to
Boom.
put ourselves in the position of the consumer and how they feel. And this is not about hard closing, this is not about forcing them into a house. This is about making their dreams come true and understanding that it's much more expensive than they ever planned on, and that maybe they have some remorse in their life that they didn't take action sooner. but really caring about the individual that's in front of you, I think is the only way to get to the finish line today. And I think too many of us are like, sell, 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 because that's how we were trained in the 80s and the 90s and the 2000s. You could just sell, 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 pick up the phone, call, call, call. That's not working. Invite someone to your office, sit with them, give them a cup of coffee, give them a book about home ownership. Do something like that. Be different. Do something that's totally different than everybody else, and you'll have more success.
I think that's spot on, and being consistent with the database. One of the things that's happened in the last 2.5, 3 years is there's been an extreme amount of pent up demand pushed to the sideline. And that pent up demand is not all actionable, but some of it is. And there's consumers that are sitting on the sideline who have a economic or family reason to make a change. They need to be in a different school district. They've had another child. They've gotten divorced, and they are not making the decision because they think that the decision is impossible or out of reach. They're not going to be able to afford the solution. There's a lot of consumers in that camp who need that conversation and need someone to hear that, hey, we've had 2 more kids. This like 2-2 isn't working anymore. And like, let's figure out a way. And, with all the AI and online content out there, I'm saying this as an online content guy, like the internet can't answer that question for them. The internet can't help them understand how do you go from the starter home to the next home when life changes and interest rates are 7%. And that's a real thing. There's a consultative approach that we all know we need to do. It's the same thing when I talk to my clients in advertising or data licensing. There's things that they don't think are possible that are. You just really have to hear the objective and take a patient approach to winning the business.
Totally agree. I was seeing if Gina was going to
I have
respond to that.
I'm believe it or not, I'm still having tech
Yeah.
issues. I'm just dealing with it.
I'm reading some of the comments. Wow,
Yeah, we should
Dustin
go into
Woodhouse
some
up in
of these.
Canada, like mercy, man. So
Right?
you're saying that 80 to 94% below the 10-year average on transaction volume. That's a tough one to deal with in Toronto and Vancouver.
Yeah. I mean, so in the absence of transactions, kind of to walk back to where we were a little while ago, one thing that's positive about it is when you talk about an asset and an asset as an investment, the volatility of an asset is controlled by its liquidity. And if you want a perfect example of that, houses only move 3 to 4% annually because they're hard to trade, right? Because it's hard to sell a house. It's hard to buy a house. So what it actually does is it creates a stable asset. Move to the stock market, which is much more liquid, you can have a 5% swing in a day. Move to the crypto market, which is the most liquid thing on the planet, and you can have a 5% swing by the time you come back from the bathroom. So we have to also remind ourselves that that lack of liquidity that housing brings is what brings its stability. So these lack of transactions, and you alluded to it earlier, Clayton, these lack of transactions are bringing necessary calm to what was a very overheated market. And we are in the hangover, as I like to call it. That's really what happened. Everybody was partying for a long time, and now we're in the hangover. And so how long does the hangover last? I don't know, but we're throwing everything at it. Hamburger, breakfast burritos,
Yep.
aspirin, everything we possibly can to feel better. And soon enough we will. Eventually we will, and this too shall pass.
And that's going to be a big topic at the gathering coming up in a week and a half. I was at a event with 2 executives, one from a mortgage lender and one who leads a really large real estate brokerage a few weeks ago. And we were talking about, the other side of this, like when you get past the hangover and at, executive levels. And I think this should also exist at originator levels. There's an understanding that the longer we stay in this hangover, the longer we stay and hire for longer, the more, competition that will leave the market, the more market share consolidation that will happen, the more opportunity will persist for the people who have the resources to invest in technology or we're really good at getting back to the basics on that relationship side. So if you really have to go find the true silver lining of tough markets, it's when tough markets is when winners are formed and when market leaders are formed. And man, I think of it all the time. I'd rather be operating my business in 2022 than 24 and 25. But I am fully aware of the competitive advantages that we all gain as we push forward through this tough market. And something I tell myself, something I tell our team, and something I look at you, Don and Gino, as you build momentum builder and the combination with sales mastery. Like, you have a unique opportunity here that that might not have existed, or you might not have had the bandwidth for in 21. And so using
No,
market dynamics
100%.
to your advantage is just critical.
I love where you're going and stuff about the hard. I love what Lonnie put in the chat. It's very apropos because there's a lot of whining out there because we had this hangover, as Gino mentioned. It's made a lot of our industry, I won't just say our team, but a lot of our industry a little lazy because it was so easy. They were collecting big paychecks and the business was just rolling in. Now you have to go out there and chase it. And I love what Lonnie put in because you can choose your hard. Now, like in Tom Ferry, which there's a secret regarding that. But anyways, we like Tom Ferry. He's one of the best real estate speakers out there. Put that, okay, doing the hard work right now, like we're mentioning that Claudia's doing now. Like, she's literally going out and dropping off waters again, doing old school stuff. She's doing webinars for first time home buyers. And if you think there aren't any first time home buyers, talk to Claudia. She's crushing it with that because people still want to be in homes. And but the other hard is try being poor. Try spending your time and effort figuring out how you're going to pay the bills, how you're going to pay for the mortgage, how you're going to get your kids through school and so forth. So that's harder, I believe, than just going to work and figuring it out. Because if you eliminate those distractions, because that becomes such a distraction, it paralyzes you. You can't even go to work, and it's a self-fulfilling prophecy. But if you put in the time and effort over time, it always pays off. Over time, it's not immediate gratification, but you're like, I know I'll put this around. I was telling Claudia, because I'm like, those actions, I promise you, in the next month will end up being 6 to 10 transactions because of what you're doing. And she already met with four new agents and got 2 new deals like that because she put the effort into going out and putting herself in the way of opportunity. Let's put it that way. So there are opportunities out there. Is it easy? Hell no. This is tough. But you're also sowing those seeds for the future.
Yeah, I mean, Dale Vermillion put it best on our 100th episode last week. He said that ultimately he was basically reminding everybody, stop measuring your success by your results. Start measuring it by your daily activities. And when you start doing that, then you start to feel confidence and pride, and you know that you're doing the right things and you're doing it for the right reasons. And then here's the magic trick, do it consistently. If you do the right things consistently and feel good that you're doing the right things, results will come. They will come. Eventually, they will come. A lot of times, we see that, and we're all guilty of this. We try something new and it worked really well once. And so we never do it again. Why is that? Right? Because it's hard to change behavior. But this market is so different that it's going to require behavioral changes. It's just required by law. That's just the way it is. And so until we can leave the old person behind that used to do X, Y, Z and it worked, and realize that you need to do the ABCs for it to work, until you leave that old person behind and you stop talking about the past, who cares what happened? It doesn't matter. It's totally irrelevant. What do I need to do to go forward? And so we
Yep.
just have to think present state, forward state. And when I say forward state, not forward state with fear, forward state with confidence, because the things I'm doing in my present state are going to help me win.
100%, Gino. Well said. Well said. And I see a lot of these people that are on our call are those people doing it and stuff. Hey, Corey, good to see you. She's a grinder. I know she's just digging in and she's been in the industry for quite a long time and she's back in the grind doing what she needs to do. And that's why she goes to president's cabinet events and so forth. You just got to do the grind and
Yep.
it does pay off in the long run. And I just want to let everybody know that, just hang in there. I mean, time does fly by. We've had tough times. We've gone through 2007, 2008, 2018. You go through some tougher times, but then the other side of it does make you appreciate it again. Wouldn't you say,
There,
Clayton?
there's hang in there, but there's also like proactive change. And like part of what's happening in this like market environment right now is that the big boys, the leaders of the industry are making changes. Some forced, some by choice. So like at the gathering, a lot of the speakers on our, so this is June 8th through 11th out in Colorado Springs. The two Sunday, the first day is very like real estate brokerage focused. Monday and Tuesday are like straight down the like the housing market alley where like mortgage, housing market, and real estate intersect. And then Wednesday is actually we're partnering with NBA's Empower Group for a women's summit. But so when I talk about like forward looking movement and change that's happening. We're doing a session on Monday morning with Nakia Wright from an AR talking about completely reinventing the trade association as they move through the commissions lawsuit. So like not focus on the rearview mirror, but focus on like where the organization is going. We jump right from that session to one that I get to moderate that I'm really excited about on Wall Street's view of housing. So like the two of the best analysts in housing, like public equity analysts, this gentleman named Bose George at KBW. Bose is a phenomenal mortgage and housing finance analyst, and he's been really sharp on Fannie and Freddie reform. So, as we've seen Bill Pulte and President Trump out there talking about potential reform of the GSEs, Bose is on the nose of that, talking about market implications and stock implications. And he's partnering up with one of his colleagues, Ryan Tomasello, who's the sharpest analyst in real estate brokerage and real estate tech equity research. I get to interview Bose and Ryan at the same time, talking about what Wall Street really thinks about housing. And one of the things I'm going to talk to them about is what Wall Street really thinks about some of the consolidation that's happening right now. And the cool part of that is the deal that's like, been on the tips of everybody's lips for the last quarter is like what Rocket's been doing with the acquisition of Redfin and Mr. Cooper. I have the privilege of having Varun Krishna from Rocket, Jay Bray from Mr. Cooper, and Glenn Kelman from Redfin on stage at the same time and actually talk to them about what they're doing and why these businesses are coming together.
How cool is
Immediately
that?
after having Ryan and Bose on stage, who are probably going to opine what they think about that deal. And like, so this is this is the kind of stuff like we get to do at the gathering. We have leaders from across the industry, from the top mortgage lenders, the top real estate brokerages, the top tech companies come on and talk about their strategy. It's pretty common for like some of these companies, especially the public ones, to break news from the stage. Like last year, we broke the news of CoStar's acquisition of Matterport like on stage, and that was pretty wild. And there's a few other big breaking elements. But what we do is we hope to attract origination leaders and owners and executives from across mortgage and real estate to come and spend time with their peers. They find it as an opportunity to learn about the strategies that are working. A lot of the points that Don, that you made, and Gino, you've made, and like how to motivate the team and drive them through tough markets. Those are the same conversations your peers are having. And like, how valuable is it to be able to sit elbow to elbow or have a cocktail or a coffee and like, have conversations with people that you've worked with at different institutions over time. Like we all know this is a big industry, but when you kind of get to like the leadership levels, it's really small. And most of us have worked together with each other in some capacity at like stops prior to the one we're currently in. And the gathering is a phenomenal opportunity for those people to come together and share, learn, have a good time. But we also usually see like some partnerships or M&A deals or some things that come out of a fortuitous golf foursome.
Yeah, yeah. I got to tell you that, look, for me, these events, the reason Don and I are in these events, the reason we throw events, and the reason we attend almost every possible event that we can is because it changed our lives. It's where you learn, and it's where you meet some of your best friends or best business contacts. No doubt about it. It is the absolute best place for a couple of reasons. One of them is you're outside your environment, and everybody is, right? And so taking everybody outside their environment, you just don't learn too much when you're standing in the same spot that you stand in every day.
No, you
But
do
when,
same old, same old.
exactly. So when you go out to these events, your mind, you're listening to speakers. So when you go outside into the hallway and you go to talk to somebody, you're both primed to have an intelligent conversation about something you want to achieve in the future. And so I think that's part of the magic of these events is the state of mind that it brings you
Yep.
into so that you can express what you really want to someone else and you start to express things out loud. it'll happen. 80% of things that happen is because you either wrote them down or expressed them out loud. So you have to continuously increase the possibility of the things that you want to happen by putting yourself in the right room, expressing your desires out loud to the people that can make a change in your life, and you will.
Gino, I think that's such an awesome point. It had nothing to do with mortgage or real estate, but just like life and like ambition and like goal setting is say it out loud. I can't tell you how many times that I've said on a podcast or in a group, like, I'm going to hire a great new sales leader. And what happens? You go out and do it. I'm going to buy a business in this sector to solve this problem that we have. Said that twice, and we've gone out and bought businesses to solve that problem. It's kind of wild when you tell the world what you want to achieve, and the world, the people, like, help you achieve that, or you just create this public level of accountability. Like, oh shit, I guess I got to go do that now. And
Like running an event like the Gathering or Sales Mastery.
yeah, exactly. Yep. Yeah. We all probably said it in some context before it was reality, and willed these things into existence.
Well, and there's effort behind it, but especially what I love is, Clayton, you do a really good job, because one of our things that we really press for those that are involved with Momentum Builder and Sales Mastery is a giving mentality. Like, are you really in it for the right reasons for your client, your customer, and your partners and stuff? And you do a great job because you're always giving, Clayton. That's why we love partnering with you and want to get more involved with Housing Wire and you, and because your heart and your direction, not just your heart, but your direction and what you're doing is great for our industry. It's what we need. And we all need this camaraderie more than ever, because it's been very
Yep.
difficult. We're battling with consumer direct companies, bigger companies. So our housing industry, meaning the real estate community and the mortgage industry, needs to come together more than ever to get our share of the market, in my
Like,
opinion.
part of my motivation as an entrepreneur, and you think about like other industries, like let's use Wall Street and financial services, for example. How much better is Wall Street because Bloomberg exists? It's used for communication, it's used for data, it's used for research, it's used for transactions, and housing doesn't have that yet. So like when I think about, like, how do you make an industry better, particularly a mission critical industry? Like, housing is critical, one of the largest sectors in the economy. We make an impact not only on people's wallets, but also their health, their family, their education. Like, this is an
Jobs.
industry worth doing. Like, it's worth it. Like, no matter how hard it is, it's an industry. It's like worth doing the work. And so like when you think about like giving, yeah, no, we give a lot. Like, we write a lot of content, a lot of podcasts, a lot of newsletters, a lot of events. We charge for a lot of that, but I can assure you that we take revenue and drive it back into the business and hire more journalists, create more events, create better content and research that gives back to the industry at some margin. And like, that's, that gets me excited. Like, the more we grow, the more we have an opportunity to like build and give, and sometimes it's a little bit trite, but like, I think we can build the Bloomberg of housing and make this industry better with better information. And the gathering is part of that. Like, that's like, we get a chance to interact with a million housing professionals online every single month through our newsletters and website. The gathering gives us a chance to bring 1,000 of those people together in one location and actually like shake hands and cheers and like take that digital relationship to real life, which is, if you're doing this for a long amount of time, which I am, and I know y'all are, we're people, we're humans. Like, we need that in-person interaction. And like, it can, I got 360 days behind my desk and 5 in person at our event. Like, those 5 are going to fuel me with so much energy, even as the event organizer. But I hope we bring that same value to our guests who, take time to come to the gathering, and then a few months later, join us here in our hometown of Dallas for Momentum Builder, and like use that as fuel to go back and do the hard work. Like, just like Lonnie mentioned in his note, where he's referencing Tom's event. Like, it sounds like Lonnie not only learned something, but also left with like some energy and electricity that like pushed him to do the hard work. And I'm always looking for those sources of energy. I think about that in terms of what I learn, what I read, what I listen to, but also the people I spend time around. And very hesitant to spend time with people who take energy and would much rather spend time with
Right.
people who give me energy.
Yeah, I mean, we've focused on that quite a bit this year. One of the terms we've talked about is return on energy, because it's one of the few things that we control.
Yep.
Reality is, I'm going to put my energy into XYZ, whether it be sales mastery, whether it be a loan officer, whether it be a community, whether it be an event. I'm going to put my energy into it, and I expect to get a return for it. Right. And all the good events, all the great things that you do in life have a 3x, 5x, 10x return on your energy. And you just mentioned it. And other people just take it. And so you just have to be careful with energy thieves. They are out there every day trying to take it. And some, maybe they're in a bad place. I don't say that they're bad people, but maybe they're in a bad place. And so it's very hard if you come all charged up from one of these events or from this webinar and you're like, yeah, I'm gonna go kill it. And then you bump into an energy thief on the way to the bathroom, you could lose
The
that energy.
crabs?
Like, yeah, the
We call
crabs.
them the crabs. They
Yeah,
want to
it's
pull
called
you back into the trap. No, you can't
yeah,
get away. You got to stay here in the trap with me.
yeah,
No,
yeah, crab mentality.
Yeah.
So I'm just
tell those
saying, like,
people to go work from home. I want to go rub elbows with the
yeah.
energetic ones.
Right, right.
Yeah, and listen, this room, the gathering, is a room of leaders, right? It is 54% C-suite. This is a room of leaders. These are people that have already, and I'm going to say this out loud because it's the truth. As an entrepreneur, you have to become accustomed to failure, right? So these are people in this room that are accustomed to failure, and you know why they feel comfortable with failure? Because they know that from failure comes growth. And from growth come gains. And ultimately that's what's going to happen in that room is you're going to be surrounded by people. When they say who's in your circle, you're going to be surrounded by people that have been through things like this before, have endured more difficult times than the one that we're going through, either personally or professionally, and have an outlook that you want to get a return on energy from. There are not going to be energy thieves in that room. There are going to be people that bring you growth,
Yeah.
guaranteed.
Yeah. That's a little bit of the selection bias of like good events to start with. Like the
Yeah.
curmudgeons just choose not to come and like spend time with the people who are, who are gonna win and get to the other side. But
Well, I'm glad that
I
you put on these events for a reason. I mean, getting together with your comrades and getting giving energy to each other and then coming out of it with a strategy, because hope is not really a strategy. Everybody hopes the market's going to get better, but when you walk out of a room more educated and have strategies that you know you can implement, it's amazing. Like we went to High Trust Sales Academy. I did it 30 years ago with Todd. And then we went recently and we're like, holy crap, I thought I really knew my shit. But we walked out of there with 20 ideas, which is inspiring because you're like, I have 20 ideas to do better than I'm doing now and bring it back to my team and help them do better. So these events are super important for our
Well, it's
industry.
the cool thing about education is, and sometimes makes me wish I could go back and like do college again. But like learning with context is totally different than learning without context. So even if you go back and learn the same thing year in, year out, there's going to be nuance to what you hear and what you take away because of like, all right, I applied 10% of that last year. Now I can like remind me and I'll get to the next 10% and the next 10%. And like, you'll just hear something different. And that's from the stage. That's not even what you learn from the other attendees and like the community you're part of.
Yeah, and I mean,
But
it's,
yeah, we
same
spent a
thing
lot of
with,
time. We talked a lot about like motivation and strategy and like getting through these tough times. And we started out talking about industry data, and I will like I mean we've plugged the gathering a lot here, but I'll also like go to housingwire.com. We've launched a ton of new data and housing market features in the last year. So on the Housing Wire homepage, we have a whole market data section that shows national inventory and list price and days on market and price reductions and price per square foot. Our users, the subscribers who pay us, I think it's $349 a year, can plug in zip codes and compare their local data to national and start to save down some charts and stuff. So it's there's so many new tools that our product and data team have brought to the forefront on Housing Wire this year. I'll take any chance I can to plug some of this stuff because these are the tools that I use. These are the tools that our journalists use. But we're always in this conundrum where like, we're in this national housing market, but now the homepage Housing Wire gives you the chance to take it local. And our Altos business also gives you the chance to take it local. And I think we owe Dustin an update on getting up to the Great White North, but today this serves our friends stateside. But we'll get there, Dustin.
No doubt. And it is great. I mean, you have so much info and knowledge that can be shared. I mean, everybody's always wondering what can I share? And you have it all in one source. It's all here. All the data is here. The updates are here. You can be a source of information for your clients and for the industry. And I know that's what you've been doing, Clayton, and your team. And you guys put a lot of effort behind it. So you guys do the hard work for us. We can just go
Oh,
to your site and I'm plugging Housing Wire, but it's a no-brainer. It's the resource for all of us.
in like the housing market section, I mean, it's built to be shared. I think we're playing with some feature updates right now, but we had a whole like export thing. But right now, screenshot inventory, the inventory chart for your local market. It's not even like branded Housing Wire. Take that, make it your own, and like use it to educate your sphere. I mean, this stuff is built. We don't want to be the consumer resource. We want to be the B2B resource. So like if we can like serve you and give you some data and tools and knowledge that you can put in your own words and make appropriate to speak to your referral sources and clients, then it's a win for all of us.
Nice. And appreciate you putting together the gathering. We know how much work it is to put events together. And Gina and I are super excited that you've done that because now we get to go hang out with our peers and other leaders and see where the industry is going, what we need to do together. And we also appreciate you being invested in helping us spread the word and get more people to sales mastery, which we brought back, which was the number one mortgage,
Yep.
event for 30 years, thanks to Todd Duncan, who changed our career, our lives, without a doubt. Because my story was I quit the business until I met Todd and just learned how to do it right and met the right people and the right tech. So, and that's where Momentum Builder comes from, is basically providing the best resources we possibly can for our industry. So they have shortcuts basically to success. And that's why we align with Housing Wire. Here's a shortcut. Here's the right tech. Here's the right coaches. We vet them out so that you don't have to, because there are some posers out there. I'm sorry. There's people who are just trying to take advantage of our industry, and we'll do the vetting for you. And Gino and I have caught quite a few. And we're like, no, we want a demo or we want to
Yeah,
talk
well,
to you.
what was it? Just last month, we had someone reach out, say they want to be a sponsor. I said, I
Yeah.
don't even know who you guys are. I said, give me a
Yeah.
demo, let me take a look at it, and then we'll see if it's good. And I went through it, and then Don and I didn't talk about it for a week or so. And then later he goes, hey, what happened with that company you were supposed to demo? I'm like, it's terrible. We can't
It
have it
was
on
like
our.
9 years old
Yeah,
technology,
That
but
probably says everything right there. The week passed before you
yeah.
talked about it. Like if you had left with interest and excitement, it wouldn't have been that wouldn't have
Right,
been the
right,
dynamic.
Yeah, but the point
right.
there is that like we care, we protect our community. That's what our job is to do, for our community, for our people that come to Sales Mastery. Is that we only want to show you and have people show you products that work, products that will help you succeed. That's it. So
Yeah.
when you do come to the event and you see that we have sponsors, of course we have sponsors because otherwise your ticket price will be double. Okay, so think about that. So the sponsors are subsidizing your ticket in exchange for you taking a look at a product. And we've already looked at that product and we've already validated and we see value in it. Otherwise, we wouldn't have it there.
And
Oh,
there's
and
like, I
the
mean,
effort going into the event. Like you're very, very strategic in who's on stage, why they're on stage, what you're going to talk about on stage. Shoot, we're on a call with Todd Duncan. Literally, you think he just could show up in October, but I'm on calls and texts with him like every single day, we talk to you like, hey, how can we make this better? Who do we need? In fact, we're putting you on, just so you know, you're running a panel,
me
a
Yeah.
leadership panel. Yep.
there
Because you're
for
in
it.
the know. You just like you were talking about for the gathering, you're like, I got this person we can talk to. So we want to leverage who you know and who we need to know and hear from at the event. So this, you talk about being events and hearing things like, oh, that's new. Clayton just learned that he's running a panel.
You know me well enough at this point that I can roll with the punches. And you're giving me a 6 month heads up. So like,
Yeah.
who cares?
Yeah. Well, hey guys, we do want to start on time, end on time. Clayton, thank you as always for joining us. I'm
Well, let's
so
pop
excited
up
for the
our
gathering.
special for those of you. We want to pop up our special for everybody because this is discounted. The event
Yep.
will sell out. So we have gathering almost sold out. So join us. Please come say hi to us. Go to the event. It'll change. You'll feel a breath of fresh air. Trust me. Just being at an event like this and surrounded by like-minded rock stars and industry professionals, And then after you go to a gathering, you go, I need to go to the next event, which is in October. We'll pop up that slide. We have this discount and take advantage of it now because prices will go up and it will sell out. But this is going to be just an amazing event that you can hang out with your fellow peers and industry experts, and you're going to walk away with an implementation strategy playbook. No one's ever done that before. You're going to literally walk out with it. You're like, most people take notes and go, what do I do with it? We're not leaving you stranded. We're going to keep.
Can I just give like a quick event organizer like background knowledge here?
Yeah.
Everybody raises prices as you get closer to an event. And I just want to highlight, like, for anybody who hasn't organized an event, this is not some scheme. It is so valuable to have people registered for events early. It lets you plan the venue. It lets you plan F&B. It lets you negotiate better contracts with your vendors. It helps you sell more sponsorships to subsidize tickets. Like, it is wildly important to register early. And we do it aggressively. Like, our price for people who signed up at almost a year ago versus now is like 3 or 4x like higher because of how much value it gives us as an organization to pre-sell and be able to plan. So like, it's too late to sign up early for this year's gathering, but it's not too late to sign up early for Sales Mastery. So hook these guys up and give them some transparency because it is really hard to plan events and people sign up in the last 2 weeks.
Look at Sonia. Sonia's like, yay, go Clayton,
Yeah,
go
yeah,
Clayton.
yeah. Thank you. Preach. Yeah,
It's
thanks.
something I feel like I have to explain from time to time.
No,
Like,
no,
this
I
isn't some scheme.
actually I'm
It's
taking
called
notes. I'm
business
like,
planning.
we never explained that. It just looks like it is a ploy. It does look like, oh, you're just trying to get, but we have to put deposits for speakers, and to get good speakers, you need the initial assets. You got to put deposits for the AV team and all these things. You're right. I'm glad you
It's a help me
clarified
help you
that.
thing.
It
Yeah.
is. It is, and you're
And not
getting
to
a discount.
mention, and not to mention the stressful thing that everybody procrastinates to the last 60 days before the event. And you walk into the event 60 days before or 90 days before, like only 20% sold out. And you're like, oh my God, are we going to make it? And then everything sells and everything's fine. But it's
You
just,
get there.
please don't make us stress out to the last minute, please.
Well, also we do monthly calls with Todd Duncan. We build momentum now. You get
Yeah.
discounts. You're getting free fuel app. You're getting Shred It. You're getting selling power mat. We're giving you value now to help you build momentum heading in October. Ours is not just a one-stop shop. This is an annual thing. We're with you, we're your partners, and we're building an amazing community, as is Clayton with Housing Wire. He's a strong part of our community, and we want you part of it. We really do, because our communities together, between Housing Wire and Momentum Building and Sales Mastery, will crush anybody that's not part of the community. Bottom line, that's my
That's it.
opinion.
Let's go.
All right.